Boom. Andy Fenton.
My friend, back on Friday.
Well, after popular demand, move it back to Friday. Andy, move it back to Friday. Jace, here we are, ladies and gentlemen. We're back at Friday. Thanks for being patient with us. You're still on the green juice, mate, I hear. There you go. It does look a bit like wine today. So, it looks actually the colour of your shirt, a bit green, but...
It's not something that you really swirl and smell. I can tell you, it'll wake you up in the morning. That's for sure.
Well, we've got a few people jumping on, Andy. So those who are dialing in, we've got Alison. How are you, Alison? Friday, yay, indeed, and Friday we're here, and
James, we're good to see you.
Yep. Good to see a few of the regulars coming back for. Welcome back, regulars. For those who are dialing in for the first time, quick intros as we kick off our Friday today. We've got a fair bit to cover, plenty in the news, and we got some good information we want to share with you guys tonight. So hang around. Plenty of interesting things going on in the marketplace, and it's going to be a fun night. But for the newbies rocking up today or watching the replay, Andy Fenton, Jason Witten here, 20 plus years in our professions, property. Mine, Andy, is in banking and finance, and we get together. It used to be Fridays, and then it was Wednesday, and now it's Friday. We'll see how we go. But it's at least once a week, and we debrief the week from our industries serving our clients. You guys, all the people putting in the chat now, thank you for giving us a shout out and saying g'day. We want to be here. We want to help demystify, decode, give a bit of confidence when it comes to, being an investor, taking care of your money, being a business owner, being a property investor, being, diligent about your future wealth, taking care of things. So that's the goal of Fridays or Wednesdays or whatever it is, our Wealth, Wine and Wisdom conversations. And we cover three rough, loose topics. What's in the news, debrief some of that stuff. Things we reckon you should know as keen beans when it comes to the world of money and finance, and, some questions. And today, what we would love, for those listening in right now, gang, we would love to bring one of you guys on as a live guest if anyone's game. If anyone's game to be a live guest, give us a shout out in the chat. And a bit later on, about maybe 20 or 30 minutes, we would bring you on if you've got a cool question. It doesn't have to be a cool question. Any question, join us as a live guest maybe, and see if we can do that. We want to see if we can bring a live guest on every now and then, but give us a shout out in the chat. So did I miss anything, Andy?
No, mate, but what I've been noticing is while you've been yapping away and doing a wonderful welcome to everybody on a Friday, does have a bit of a different feel to it. I must say that it's a Friday, even though I don't have a drink in my hand. It's a little bit, it feels a little bit different. There's a different energy, and geez, I can tell you what, mate, there have never been so many people pumping in and commenting so early. It's quite clear that the interested base of followers that follow the Wealth, Wine and Wisdom knock off early on Fridays, because I can already see that there's a few glasses of wine in the hands there from Bob and from Robin and Ganesh and Graham and Greg and everybody. So and what have we got? Bob here. Did you guys buy the news of Dogecoin? That's really interesting. There's also a poodle coin that did really well. But welcome everybody. It's great to see that many of you are taking the relaxed approach to a Friday. It means that
Fridays
it's been a
are
good
better.
week.
Bob reckons Fridays are better. Andy.
Well, maybe we'll make an attempt to do it once a month. But yeah, there we go. Graham's missed it as well. Wealth, Wine and Wisdom on Fridays. So maybe by popular demand, Jace, maybe we'll do one a month. We have to manage the time away from a Friday night, because like most of you, and like what I'm doing right now with a fast and a bit of green juice and a reset in the stomach, is we can't party every Friday. Okay, so
well, we used to, Andy. We used to, but these days not so much. Well, mate, why don't we get the show on the road? Why don't we kick things off this week? And I might sort of give it a bit of a kickoff this week and throw round to you. Let's have a look at what's in the news and what's happening in the world of, property and maybe what's happening out there in the marketplace. Let me move myself around here. There we go. A little bit better. There's a talk of a bubble. I don't know if anyone's sort of heard that around. That's a bubble. It's going to blow up, gang. And I've heard that for bloody every year for 20 years, I think. Anyway, but more often than not. But I just wanted to show this chart, Andy, which is an interesting one. What a lot of people didn't realise is actually the prices fell. Or the index, the rolling prices fell from late 2017 all the way through to late 2019 in the Australian property market. Now, it didn't mean every property fell in value, but gang, we're only just sticking our heads above our 3.5 year ago highs of the property market right now. Sydney has just poked its nose through a little bit further than Melbourne. Melbourne's only 1% up on its average price from 3.5 years ago. So welcome back, Melbourne. And Sydney is, and Sydney is at 3% higher. So new ground, obviously, Andy, but I wouldn't call it a bubble. I wouldn't get carried away, team. I wouldn't get carried away, gang. If you're worried about, is the world in a bubble? No, the property market is not in a bubble right now. And there's a million reasons why. We'll talk about them a bit later. But there's no bubble going on. And we have a broken supply chain, which Andy and I might talk about a little bit later on. But what do you see, Andy, in the world of your space? Any bubble talk going on?
Mate, well, there's bubble talk everywhere. It really is. As soon as something goes up, it's a bubble. And that's pretty much the commentary in the news. But I'd love to comment on the Melbourne part there. Melbourne, we're coming from behind, but we're sophisticated and slowly making our way back. We don't want to show off. We're not like Sydney. We're not like the other parts of Australia. We're just quietly making our way back. And then before you know it, we'll be dominating as well, like Melbourne does. But mate, of course, as soon as things go up, we've been seeing a lot of in and around housing prices, bubbles. And look, I'd love to see the relative measure other than more than a month going in the upward direction, mate. It tends to be that there's bubble talk in town, but maybe we'll get into some of the other supply chain stuff later on that has been because it's something that's in my news, and maybe we'll jump in between us this time if you like, Jay.
Let's do it for sure. One little bit of tidbit, gang. We'll swap this out. We'll whack Andy up there. There we go. One little tidbit, gang, is that Melbourne just passed. You might need to resize your screen, I think, again, Andy. Remember we did that last time.
Doing it.
One little tidbit for Melbourne's property prices, the average house price just cracked on through the old $1 million mark, which is great. Good for Melbourne. I believe Melbourne's going to be the powerhouse in comparison to Sydney. I believe it's got the capacity to. And Melbourne right now, one thing that I'm really pumped about for Melbourne is that we have the largest infrastructure project Melbourne has ever seen, or Victoria has ever seen, which is underway, which is the new train, well, they call it the loop or something like that. Anyway, it's the outskirts, the train stations. And watch this space, gang. If you're into property or infrastructure or anything when it comes to Melbourne, that thing is going to be a game changer when it comes to the Melbourne city. And once that's in play, I think that Melbourne city is going to really just make that nice and strong. So, keep an eye on that one. Andy, if you can move yourself over to the other side so you're not covering the picture. Boom, look at that. There we go. Happy days. Where is he?
Mate, I'm everywhere. I'm getting everywhere. I love that about Melbourne. But just we've got a bit of time to be able to figure that out in Melbourne, because the last time we tried to do any major infrastructure projects was meant to go for 2 years. It went for 10. So my guesstimation of the finishing of this tunnel that's meant to be done in the next 4 years is that probably will be finished around about 2050, maybe 2051 at a conservative measure. We don't have the greatest record of finishing these things on time or on budget. And mate, just on some of these things, it's amazing that there's a pier down in Flinders, which is a deer pier down in Flinders. It's a bit of it's what do you call it when they are a heritage sort of listed site, and it's a bit rustic and it's a bit down in the dumps at the moment. And this is down on the Mornington Peninsula, down Flinders Way. We're willing to drop a couple of $1 billion into these infrastructure projects, but not a couple of $100,000 to fix a heritage-listed tourist attraction down on the Mornington Peninsula for little kids to go and run and jump off and people to fish off. I think it's a travesty. There's a lot of money down on the Mornington Peninsula, and I think that you should just bloody fix it down at the council so the kids can swim and jump off.
And someone we might know might live down there, so there might be sort of, a bit of an agenda there, but that's okay. I think you're right. We should...
It's all about bringing beauty to the area and the tourist down. But anyway, I digress. But mate, one of the things that I picked up during the week over in the US, I've been following the US a lot, obviously, because they're going to be the big leaders, whether it's geopolitical, whether it's tensions with China, whether it's trade, all of these things. We really need to be keeping a close eye on what the US is doing so we can understand what the rest of the world's going, or the flow-on effect. But here's the really big one, which I saw, and I used to have a relationship with one of the CEOs of the Hancock Global Empire, and they have the largest forestry company in the world, and mates, they are US based, and when watching Bloomberg, and I read some more articles post that, lumber prices soar, and we talked about this last week, actually 2 weeks ago, and so they finally started reporting on it, mate. We are ahead of the curve. And mate, these prices are, well, mate, and I've got a few other little bits to back this up. And I've taken some notes on some of the statistics behind it because I thought they were quite remarkable. So this supply chain block. So also let's think about this in the context of Australia, right? And think that we are miles from anyone, which helps us with COVID, but it's also tough to get stuff here. So it's added in the US 25,000 on average, 25,000 to your average house build. The cost increase at the moment. And mate, from a housing market perspective, the housing market is still going. 50% of all houses in the US on average are now being sold in the first week of being put up. 50% of all houses are being sold within the first week of being up. So we have, and the reason why I mention these two things together is we've got fixed costs, and this is going to be a real one. Like we said a couple of weeks back, the builders are going to have to watch this, because this could, if builders are operating on tight margins and this isn't built into contracts, which you would know more about, but I know when I built my place, mate, there was no provision for increasing cost of wood or other costs like that in my contract, or at least none that I could see. So that could be really problematic with picking your builders and contracts that are already in play. So opportunity, maybe, right? Because there might be some stuff that comes undone here, but certainly one to watch. But mate, again, watching the US as far as that's concerned, lumber prices going higher, expected to come back after the supply chain comes back online. And look, that's probably what we're going to see down here in Vic. So I thought you'd love that one, mate, because it's very much in my world, and I'll just dovetail that in with what we were talking about a couple of weeks ago about Bluescope. That's what it's done since. So 7% up. Jason, you should be in the stock market, mate.
I should be in the stock market, mate.
Again, we're not saying go and buy it, but just interesting to watch some of these trends. So Bluescope on the rise. Whether it's on the back of this, who knows? But is it a coincidence or is it not? So, mate, interesting. Anything to report on that?
Mate, certainly I was chatting with a few people the other day, and I can't remember if I said this or not, but, the bushfires in Australia really gave Australia's timber supply, our local timber supply, an absolute pummeling. And so that's why, not only we can't sort of buy timber from overseas, but our local supply got a real touch up. And, at the end of the day, it's not going to recover that quickly. So, I think we've got 2 or 3 years of that going on. Candice was talking about that as well. Candice is in the building industry. She's jumped on once or twice of recent times in some of the lives that we've done. And, certainly, industry-wise, it's one you've got to watch when it comes to your builders. Certainly, Andy, we had some experiences in and around the GFC. Last time there was a little bit of wobbliness going on when it came to, controlling your supply chain. Some builders certainly came unstuck if they weren't very good at that. They're forward booked purchasing and stuff like that. They're halfway through a project, but their contract ended, and 20%, 30% increase in their materials means that they've literally lost money building that house. And if they've got 100 of those houses they're going to lose money on, boom, it's over for a builder. So yeah, it's touch and go for a lot of those types of builders if they're not smart and clever. So you got to keep an eye on it for sure. But like Candice is saying, our 3 main builders that we partner with all have given us notice that they're no longer using timber frames. Expect delays in the construction of the houses, and we're changing to steel frames as we speak. So, that's an interesting one, Andy. I think there's a bit of opportunity in there, and also, like you said, something to keep an eye on just in case if you're in the middle of something with a builder that's going to supply you something. Just keep an eye on them. If they're a small to medium builder, they could get crunched in this time.
Well, and when we talk about supply demand, so this pushing out the potential of properties being built, all other things being equal, can sustain those types of prices for a while, because until the demand is met, it's unlikely that there's going to be significant downward pressure on prices, unless there's some other major economic event that does that. But at the end of the day, people have got have to have a place to live. Yeah,
and we can't make, timber grow very fast. Unfortunately, I've covered you there, Andy, with this little comment. But, Candice is sort of adding some value here, which is great. Thank you, Candice. 8 to 10% rise in timber, and then 15%, further 15% in June and July. Right? Just imagine, it's huge. The net margin for a builder at the end of their project, most builders work on a sort of an 8 to 12% margin on their building. When you add that up in their timber supply, when timber becomes, maybe sometimes 20, 30, 50%, of their expenses, that can be pretty significant with their margin at the end of a build. So, yeah, interesting one, Andy. Interesting one. It's always this knock-on effect. It's interesting, the web that sort of filters out from, an impact of something, and then it sort of knocks on and flows through to sort of weird and strange places, isn't it? At the end of the day,
right, I like 100%. It. And both of those actually support, longer term higher prices, longer construction, less stock on the market. The cost of the stock is going to be higher, so the construction will be more significant. And look at that, Margot's actually come on board today. Margot Fenton, my dear.
Shout out to our number 1 fan. Thanks, Margot.
We appreciate it. We didn't get an angry face this time, which is wonderful. Operating on the new iPad, there's a little bit better dexterity that's happening there. The other thing, mate.
What else is going on?
That was worth note is Biden's actually sticking by his guns at the moment. So we could see some write-downs in stock prices over in the US, because Biden is now really aiming to increase those corporate taxes, increase the tax on the rich, the reverse. He's looking at the Robin Hood sort of trade at the moment, and whether he gets it through or not, it's going to create a little bit of turbulence in the market at the moment. And we've certainly seen that in the last few days, where we've seen things come down from from a reasonable high. Cheeky buggers, aren't they? Yes, we are, Julie, 100%. But again, this will be interesting to look at, because our Australian politicians very rarely have a unique idea of their own. So I wouldn't be surprised if you see some of this coming around in the budget that won't be too far down the track, because budget time is heavily upon us, people.
Yes.
If you didn't realise that, whenever they're showing their faces more frequently and trying to kiss babies, that's when they're about to go on their little parade. So, mate, just the only thing to watch there, I think it will be whether we in Australia take on the same
well,
tack.
it's an interesting one, Andy. Like, you know, you and I were chatting about this the other day, and, you know, while I'm very pro entrepreneurial, you know, financial stability for you as an individual, you should be able to take care of your own money and finances and build your own wealth. At a certain point, like in my opinion, you know, if you reach $1 billion or whatever it might be, you should get a plaque, and the rest of it should be reinvested into the community, I think, you know. And, you know, it's an interesting concept. During COVID, some of the wealthiest people on the planet doubled their wealth. Like, you know, they made another $100 billion. So the bottom 30% or 50% got poorer. The top 1% doubled or tripled or quadrupled their wealth. It's insane. It's like the gap is just mad. And, you know, it's an interesting one. Maybe, you know, we should put maybe a wealth, wine, and wisdom, and you know, something else in there to talk about one time. But, you know, I'm actually a big fan of that stuff, Andy. You know, like I'm a big fan of when there's a certain amount of resources that are retained and not reinvested into the country and the marketplace, and, you know, redistributed. I think it should be, you know, something that's discouraged personally, you know, because, you know, if people just sit on big piles of money, it doesn't make the economy work. That's not what the free market system is all about. You know, it's about making money and making jobs and opportunity for people, not just sitting in piles of bloody cash, you know, getting rusty or moldy in someone's big vault. So yeah, interesting conversation. You know, hopefully Biden gives it a nudge, because America, you know, has an extreme difference in, you know, wealth. You know, Australia's not that far behind, but yeah, I'd be interested to see. You know, we could give that as a subject one of these days. It'd be interesting to converse on that one.
101 ways to utilize an extra $1 billion. Yeah, fill up the pool with cash instead of water.
Yes.
So, but I thought I'd just whack the one on the right here, just as a bit of a salute and a bit of a dig at our reporting friends, as we always love them. Stock rises, Bitcoin crashes, Tasmanian bubble opens. What do they all have in common? Nothing. Absolutely nothing. And I just thought it was absolutely a brilliant title from our good old reporting pals over there. I thought, well, at least you're calling bullshit well in advance. But that's it for me for what's in the news. Pretty simple this week, but I'll reiterate, we'd love to have somebody on. So if you're thinking about your questions, whack them in there. Let us know whether you would like to come on board. I'll get rid of that. Somebody's trying to reach me. But whack something. If you've got a question, you want to join us live on Wealth, Wine and Wisdom tonight, whack something in the chat box while some people, they're probably watching.
Someone's pretty keen to get a hold of you, Andy. No, if you're listening and you want to get on as a live guest, send us pick me. I've got a question in the chat, and I'll send you a private chat message with the link, gang. So yeah, if you're keen, if you're brave enough, come and join us. See if we can make it work. So yeah, there you go. Well, mate, that's great, buddy. Well, I've got a couple of other little things that I might share with everyone as well when it comes to, you know, what's going on out there in the marketplace. But you know, a few things that are very interesting. Consumer confidence, highest level since the GFC rebound. And it's actually really, like, it's something. This is one of the like maybe in the news and something you should know, gang. I don't know. I sound like an old person now, like, you know, maybe back in my day, you know. But what something that I think that we should all really remember is the human spirit is pretty hard to keep down, right? And COVID, GFCs, there's been way worse things like world wars and so on. Economically, yes, in the short term, 1, 2, 3 years, sometimes there's a little bit of confusion and panic. But what we do know is that ultimately, the human disposition, the people disposition is like, yeah, let's get back to it. Let's live a good life. Let's make things work, and people are people. We love to be positive, and by and large, where once we sort of get through a few things get back to normal and maybe even rebound. So, right now, a few things in my world, a little bit in the news, but also things you should know is probably sort of dovetailing into, where we're at right now. This is the stuff like, all right, well, okay, there's the things you should know, gang. What's going on in the marketplace? Well, the consumer confidence is up extremely high. Australians right now, Aussies have got a large amount of savings. Interest rates are low. They're feeling pretty positive about their bank accounts right now, which is super cool. Many of them have, paused mortgages, got 10 grand out of their super fund, made more money on JobKeeper than they did when they had a job. It's been an interesting commercial exercise.
It's a confidence bubble, Jace. It looks like a confidence bubble.
Well, actually, Andy, maybe you and I should coin this. Here's my call in a month's time. Some journalist would have listened to our Wealth, Wine and Wisdom, and they'll be calling it a confidence bubble. But boom, we're on record right now. But it is. That's what I think it is, Andy. It could be a confidence bubble, because most people, Andy, you and I coach people when it comes to money, and we you and I have chatted about this before. It's the bank account emotions. When your bank account's got some money in it, you're feeling positive and good, and when your bank account's empty, you're feeling like Jekyll and Hyde. So right now, if people have got some more money than they normally do in their bank account, well, they're feeling good. They'll buy some things. They'll get that new car. They'll get that new lounge. They'll buy that house that they always wanted, whatever might be going on. So, yeah, confidence is good in Australia at the moment. And, we're seeing that economically, out there in the marketplace. What's going on, though? If you have a look at this, gang, dovetailing into Andy's, hey, we've got a timber shortage worldwide. Australia's suffering from it too. The number of listings, so properties on the market, according to, what's for sale on realestate.com and domain.com and things like that. Gang, have a look at this. Right now, here's where we are. Down here, right now, our rolling 20-day count nationally around the country as at 2021, in comparison to where we were in 2016 to now where we are in 2021, have a look at the fall. It is a 60% decrease in properties for sale around the country. 60% decrease. That's existing properties for sale, Andy. Now, if the market's going up, why would you sell? You'd sit on it, wouldn't you? Like you go, oh, well, maybe I'll sell that property. No, bugger this, I'm going to miss out. Or I had a chat to one of my clients today. They're like, well, I was thinking of selling and then I was going to move, a couple of suburbs away, but it's just insane. I'm going to stay where I am because that suburb over there, which was a nicer suburb, has actually gone up in value 500 grand. Now I'm out of the market. People are staying where they are. There's no properties on the market because either people are holding them or they can't move to the other place that they wanted to. So it's an interesting thing when it comes to the property market. And I don't think that's going to be solved anytime soon, gang, in Australia in the property market because we have this massive decline in properties being approved. We've had a bit of a spike when it comes to houses right now, because of the first home buyer grant and that $25,000 grant from the government. But gang, look at this. the underlying dwellings, if you have a look at this, from a peak up here of 110,000, it is a pretty massive decline. Again, close enough to a 50% decline in approvals into the future when it comes to apartments. And then when you look at houses, it's still down from a high from 2017, still down about 10,000 dwellings. And houses are hard to sort of oversupply or undersupply. They kind of chug along. But apartments are the ones, or not necessarily apartments, multi-density things, Andy. Anything to do with as townhouses or apartments are very difficult are easy to apply, but you need a 5-year runway. So have a look at this, gang. Look at the number here. So this is the peak, and I really wanted to get it further back, but I can tell you what happened. So it took that time frame. Have a look what that time frame is. It was pretty well 5 years. So 5 years to get to peak supply. Now it's been 5 years to be bottom supply. So if you were to look out into the future and go, all right, when would supply be, at least reasonable into the future? You're going to be from today, gang, you're going to be 5 years away from decent supply in the Australian property market. That's what happens.
Yeah, we'll mark that down for 2026.
2026, there'll be talk of, we've got some oversupply somewhere. That's what you'll have. It won't be completely everywhere because it's impossible to oversupply everything. But look at this. We've got in here, Brisbane, properties under construction right now, have fallen from a high. I'll scroll in here. 6,000 properties under construction in 2017 to right now, we are down to 1,633. Okay. It's just crazy. And the numbers in 2022 are looking hideous. Potentially 2023 might be okay. So when we look at the supply chain, when we look in the details of what's going on, what's being approved, what's actually under construction, in my neck of the woods, it's a funny gig, because a lot of people go, like a lot of commenters, a lot of the media talk about what's happening now, but they have no idea of the motion underneath. Like you can comment today, but what's happening today wasn't created today. Andy, you know what I'm trying to say? Like the thing that's showing up actually was created 3 to 5 years ago in the property world. Okay, so the results of today aren't linear to when it got created, right? And the share market is a lot quicker because there's more efficiency, there's more speed in transacting and shares and stuff like that. So maybe what happened last week can be expressed in the share market like today. But the property market, it takes, depending on where you are, it takes anywhere from 3 to 5 years to express the problem or the opportunity that happens in a market. So hopefully everyone's sort of getting what I'm trying to say, picking up what I'm laying down here.
Basically, what I'm hearing, mate, is that somebody made a bad decision 5 years ago to stop supplying houses. Now we need houses more than we've ever needed them before. So whoever's going to sit at the table at the moment is going to go, it's not my fault. It was bloody Joe Bloggs from 5 years ago. He's the one who fucked it up. And I'm here, so I'm going to turn the tap back on, but it's going to take another 5 years. And by that time, somebody else will be sitting in my seat saying it was their idea that things are already back on track. Is that basically what I'm hearing?
That is exactly what I hear. And you sound like you're describing a politician who decided that, you know what we're going to do? We're going to sort of make sure that overseas buyers can't buy our properties. And then we're going to do a Royal Banking Commission investigation. Yeah, two absolutely brain dead things as far as I was concerned. They should have managed them better, right? And it's just napalmed the supply chain of Australian real estate, right? Existing real estate is not the supply chain, and everyone sort of thinks that I'm talking about existing real estate. Right now, I showed you that chart before. People are just sitting on their real estate. They're not going to sell it. Why would they? They think the market's going up. So when a market's in good conditions, now it's completely undersupplied from a new construction point of view, and the existing properties, people are going, nah, mate, I'll just sit on it. I'm making money for the first time in 5 years or 3 years or whatever. Unfortunately, like you alluded to right now, Andy, politicians make 3-year decisions so they can be re-elected, not, help the economy medium to long term, sadly. So, it's pretty shit. But anyway, there you go. But one thing I reckon we got to watch out for, gang, and I've been sort of saying it for a while, late 22, 23, when the population borders open, and that's kind of up for grabs when it happens, but it will happen. We are on a trajectory into 22, 23, 24 of like just rubbish property supply. Like new property supply is just absolutely tanked hard. So we're like, people are going, oh, there's a bubble. Mate, you ain't seen nothing yet. You watch this space. It's going to be insane. It's going to be insane. When there's 250,000 new people come in, and quick quiz, pop quiz, gang. Where do they go when people come to Australia? Andy, tell me, quick quiz for everyone. What is the number one location? Well, in the past, just recent past as well. Number one location that new Australians entered. Ooh. Anyone know?
It's got to be Alice Springs, doesn't it?
Come on, Andy. Come on. This is your state, brother. Yes, Victoria. Right. And so they go in, they enter Victoria they enter Melbourne or Sydney, let's just face it. And that's where Melbourne's the number one. Hey, Melbourne, number one livable city in the world, like 7 years in a row. It is an amazing place to go to university, et cetera, et cetera. Melbourne's got a lot going for it in that space. When the borders are open, Sydney, Melbourne, you watch it. It will be absolutely spastic, And then, the others, Brisbane and Perth and other places will benefit from it. But, it's coming. It's coming. So there's my call anyway, Andy. That's me. Things you should know. The great
reshuffle. And it does. This provides incredible opportunities for those people who purchased poorly to be able to get out and then reposition, reshuffle the deck. And yes, but buying and selling, as long as you're buying and selling in the same market, it sort of nets itself out. But if you want to reposition, you want to get a little bit more blue chip because you've taken the risks in the past that maybe didn't pay off, or maybe they did pay off, and it's now time to get a little bit more blue, meaning blue chip, meaning higher quality, more standard stock that is going to be more reliable over time. Presents an incredible opportunity to do that. And and that's obviously what we're talking a lot about with our clients in regards to how to do that and minimise the penalties on the way through, because it is an incredible opportunity for those people, and many of them are taking advantage of it. Mate, the thing that I also missed, is that on ours, and I'll just reposition that slightly, mate. Record highs on your side, but record highs here. We've just in the All Lords, and I won't reposition myself. I'll just turn myself off there. But so the All Lords, mate, we finally, as we were saying, I said it to get up there, but we've just popped through the previous high of pre-COVID, which was pretty close to the previous high of the GFC. So there you go, sort of 7 years, 10 years down the track. Really haven't gone anywhere apart from down, then back up again. But we've reached our new high, and tomorrow's anybody's guess. But it's incredible how quickly we got back that ground that we lost. So we're celebrating highs at the moment, and you're telling me that we're going to be celebrating in Victoria very soon as well, which will be magic.
Victoria.
Go Victoria. Go the Storm.
Well, mate, it's
game with a weird shaped ball where people throw it backwards.
Well, sometimes just we can keep those debates, to till after the party. All right. But it's an interesting one when we talk about different investment vehicles. The stock market, property, whatever it is. I saw this chart the other day. I was going to share this with everyone, and maybe you and I can have a quick chat about it when it comes to. All right. Well, we talked about volatility once or twice and talked about, investing principles and these sorts of things. But, it's an interesting thing. It depends on which chart you look at, obviously, too. But, if you have a look at, the S&P, ASX 200, the CoreLogic dwelling price, it's kind of like, long term, they kind of, get in step in reality. One's a bit more volatile. One seems a little bit sort of less volatile, but, by and large, over the longer term, they're kind of, neck and neck in the idea of the outcome or the value or whatever it is. But what would you say, sort of looking at a chart like this and someone sort of saying, Andy, all right, well, maybe, would I invest in shares? Would I do property? Should I do both? Where would you come at it for someone, right now? And while Andy answers this question, gang, if anyone's got any questions this week, give us a shout out. Graham's being, pretty cheeky. Andy, you need to get on board with the NRL. Storm's a good team.
Mate, I heard that we were robbed at some point in time of whatever it's called, some sort of a cup. Geez, I'm showing my knowledge levels there, aren't I? I'll be the quiet one on this one. But look, if you want to jump on board, quickly put a message in there so that we can flick you across a private chat and get you on board with us. So, you can use your phone to stream in with us. We'd love to have a guest. So
you don't have to be live to ask a question, Andy. Maybe everyone's terrified to ask a question tonight because they think we're going to make them live. Listen, if you don't want to be live, that's perfectly fine, you lot. But ask any questions for us if you want something. If you want to get some juices flowing, shout it out. You don't need to come on live unless you want to. All right, there you go.
Right. So going back to, I think it was Brian, I saw something go through the chat earlier on. I can't see it now, but it went down there and he talked about stimulus. I'll answer this question in two parts. Yeah. That's it. Yes. So look, they're not the only one who's been switching on the printing press. Now, to answer the question in regards to what's the global effect more broadly, that's a whole probably month of wine and wisdom. So perhaps I'll narrow that down to the markets, because money printing to share markets is like demand shortage for housing. So when you switch on the tap that aggressively, it floods somewhere. Yes. And you can't buy houses as fast as you can buy stock. And let's face it, there is limitless amounts of shares. Well, there is limited amount of shares, but you can buy limitlessly. And those can go up, in theory, to a limitless ceiling. And the ceiling is based on the amount of liquidity that's sitting in the system and the amount of money in people's hands that is willing to flow in. And so the results of printing money on markets actually has a twofold effect. So it should, all other things being equal, it should devalue the dollar. So if you print in American dollars and Australia's not printing and the world is doing exactly the same in all other aspects, then the Australian dollar should buy more American dollars, right? Because the American dollar should fall against the Australian dollar. And we have actually seen that happen throughout.
Yeah, it reached parity there once before. Yep.
Has before, and just more recently as well, the Australian dollar has become more powerful. And of course, there's a whole lot of export challenges that then flow on from that. But from a market term, what ends up happening is markets end up rallying quite strongly based on the fact that usually when they're putting more money into the system, they're lowering interest rates to make it cheaper for them to put that money into the system. So companies can borrow money at a cheaper rate, and it's far more readily available to businesses. And then there's far more money flowing into the equity markets. So that sort of increased liquidity to the share market is what like what Jason was talking about earlier, is property approvals to the property market. When there's sparse property approvals, the market will run hot at a point in time in the future. And when there's large amounts of cash dumped into the system, it'll find its way into the share market reasonably quickly, because it can't find its way into the property market as quickly. So
no, it's a slow gig, our gig. Yeah.
And large transaction cost. There's no transaction cost almost in shares and trading these days. And we should share a few of the apps that have been toying around with recently. Buying some Dogecoin and a few other things, and getting right into my little crypto world at the moment. But anyway, for another time. So where do I see the balance between property and shares this is the great misnomer, and it's the biggest load of BS that you've ever been told ever when it comes to investing. And whoever started polarizing it, I don't know who it was, but they're obviously very, very influential, because they managed to basically polarize the whole country. Almost like what I hear, you're either a Sydney sider or you're a Maroons supporter, and that kind of polarity between the two is kind of where the old property versus shares argument comes from. The reality is that if you use them well together they can create significant benefits that each other cannot by itself, because they have different attributes. One is highly liquid, low transaction cost, high volatility, but potential for super growth with high tax deductibility in some of the dividends. And the other one is highly leverageable, very, very stable comparatively. But leverage is a key thing here, and has degrees of tax effectiveness depending on the borrowing. But when you strip out the borrowing, then the depreciation eventually sort of runs out, so it becomes less tax effective. So you've got two very, very different investments that when you use them together, they can create an incredible symbiosis. It's just you need to figure out how to use them together. So my long answer to the question is, which one would I invest in? The answer is both, but it's in the right quantities for the right reason, with the right strategy sitting behind them, because they will both serve you very, very well.
Yeah, and at the right time too, Andy. Like you and I have set strategies for many of our clients together, and they're never exactly the same, even though we use some principles that are kind of foundational, depending on the time or the age, time of life, activity, income, assets, goals. It's a good combination. You're dead right. Like the combination of the two asset classes can get you a far superior stability and growth and income and exposure than, just being one-eyed on the whole thing. And I got to say, my personal admission is I was very one-eyed for the first 10 years of my investing life. But maybe I was just being focused on specializing and mastering one space before I sort of looked at another. So, but it's an interesting world that we live in. And dead right. Use both of them well and wisely for the outcome that you're trying to achieve. Don't be one-eyed on the whole thing. We got a good question here from Greg, which I think both you and I love this space, which are there similar supply shortages in the world of commercial properties? Well, yeah, it's a good one. Well, Greg, the answer is yes and no. Well, and so what we must understand in the world of commercial properties, commercial, industrial, retail, they're kind of subsets of kind of potentially often what people say commercial. So what we do have right now is the world of the local shop, the local small retail shop has a real issue with oversupply, massive vacancy, massive issues with your small shop. Might be the hairdresser, might be the cafe, might be the whatever it is, those small businesses that lease those small commercial spaces that were actually very, I would call them C class or D class pieces of commercial real estate. It's called retail, and it's probably the least attractive piece of retail, real estate. It's so volatile. It's with very low quality tenants, let's say. Then you've got your next world, which is your commercial office world. I can make you a bit bigger, Andy, there if you want. Let's see. Your commercial office world, that stuff, Greg, there's actually I just tell you one thing positive. We had an office in North Sydney for 20 years of our business life in Sydney. And last year, 2020, I handed my lease back. I handed back my lease, and I'm never going back to an office in Sydney ever again. And it's an interesting thing. I don't need a commercial office for people to sit in anymore. I can still see your picture there, Andy. If you're trying to you haven't put your picture in picture on yet, I don't think. But Greg, one thing that we have an absolute insane undersupply is in this place of industrial. And Andy, do you want to dive in and take it from here? Because this is kind of dovetails between your and my worlds. This industrial space, there's a massive shortage in industrial space for things right now.
Yeah, and a bit of a shout out to fitsmallbusiness.com because I've literally just Googled this for a bit of an illustration. So thank you guys. I may as well quote the source. But yeah, absolutely 100% right. So this, and one of my pet hates is when people say to me, "Oh, Andy, commercial property, oh, that's fucked." And the reality is that, that shows the level of where the communication's coming from as a start, because quite clearly, if you've got that opinion, you need to learn a little bit more. And it's segments as well. So if we break it down into these key areas, so leisure, so that's things like hotels and stuff like that, and obviously they're going to be pummeled. Most of us aren't going to get anywhere near leisure stuff though, right? Buying hotels, the Hilton, things like that. Most of us, and very rarely do we see them popping up in property syndications and things of that nature. That's more for Donald Trump and the Hiltons, Paris Hilton and alike. Retail and restaurants. So the big stuff like your Westfield shopping centres, right the way through to the restaurant that you love, which is supported on your favourite street with all of those wonderful shops that go along there. And then obviously the office side. An office can be office, which is, blue chip, Collins Street, Pitt Street, Sydney, Camalco Place in Brisbane. Look at me go. I've just covered the whole list.
You've listed them all off, mate.
I've worked in all of them back in the past. That's the only reason I can remember. But then you've got your outer suburb in your greater metropolis centres, and there was some great stuff from Bernard Salt that we listened to not too long ago, which actually made me think that could be, because at the moment that area has been priced down in most states, and that could be a real opportunity to buy back in with the medium-term town planning that may be coming out. I don't know enough about it just yet to comment, but commercial in the Melbourne CBD, you buy right. And here's the thing, Jace, I wanted to get out of it because we got into commercial property in the office space for a number of clients in quite a big way in order to shield against COVID.
Yeah.
Sorry, it's not shield against COVID, shield against asset prices being so high and the volatility of the market. So we went into this and anyway, 18 months later, COVID hit. We've gone up, I think, 15 to 19%, and we've still clipped our 6% yield. So not all commercial property in the office space is down. If you've got incredible tenants, low gearing, great location, long-term leases, and CPI increases, then there's a chance that it'll do really well. But those more fringy ones with the lower end tenants, the ones that might be hitting on hard times, might be revalued quite significantly. But the industrial, then is broken down into 3 parts within industrial. So you've got manufacturing, right? You've got, I don't want to go to the next one. What's the other one, Andy? You got manufacturing.
Warehousing, like manufacturing, warehouse, logistics.
Well, warehousing and logistics is where I want to go, but there's one that I've missed. But industrial is broken up into multiple different sectors. Now, obviously, the more building cars and things like that has been on the nose in Australia because we couldn't build them profitably. So those obviously have suffered quite severely. But the commercial logistical space, and I've got a client at the moment who is in Victoria and trying to find something in those commercial logistical hubs, cannot for love nor money. There is 5 people for every rent when they want to swap buildings, 5 people lined up. There's no time on market for rentals, like 0 time on market. And this is out sort of Bayswater way for Victorians, if you know where I'm talking about. So there's 0 capacity for people to actually get into the market. Agriculture, health and medical. That's it. Yep.
And I got them there like that's where the jobs grew in logistics. It grew in logistics, Andy. Yep. Yeah.
So in these hubs, commercial property will fly. But if you've got a commercial property and you're in more of a manufacturing hub, then the prices are going to dive, unless that becomes a logistics hub, in which case the prices will fly back up. Because but logistics is a beast of its own, and understanding logistics, we've got a cracking guest who's going to be coming on hopefully in a couple of weeks, who can take us all through supply chain logistics and all of these wacky, wonderful things that relate to property. But mate, great question. The answer is vast and varied, and hopefully everyone can understand now that commercial property is not one beast. It is a range of beasts, and it needs to be spoken to specifically in the area. And I'm either talking to myself or we're offline. Are we still there, Jace? Somebody drop a comment in the box if you can still hear me. Say, Andy, we can hear you, and we'll keep going. Otherwise, we might have to stop it there. Too much wine for Jason. Is he offline? Oh, it looks okay. Wonderful. All right. Well, Jace will come on board shortly, but we're starting to get to the end of the session anyway. Maybe Jace has just decided to disappear on us. Leanne, oh my dear Lord, we've actually got somebody tuning in from the other side of the world over in the great UK. It's great to see you, and I'm wondering whether that might be Jason calling me now. Let's just pick this up and say hello to Jason. Jason, are you there, mate? No, he's hung up. Well, ladies and gentlemen, I think that we might end it there unless there's any questions. We don't know what's happened, but we're clearly streaming, but it's coming from Jason's end. So I'll have to get back in contact with him in order to reconnect. But whack a quick question if there's anything else. Otherwise, we might wrap up for the evening. It's been great hanging around with all of you on Friday it feels like the old days again, but just a little bit more freedom out in the world. But we love being here. We love you guys joining us. Please think of the questions before next Wednesday or maybe even Friday. If you want Fridays, just throw a lot of Friday in there, and we will make an effort to spend a few more Fridays with you. It's going to be another 4 or 5 weeks with me on the old green juice, but we'll get up to some tomfoolery regardless. But for all of you, other than Jace, my compadre that can't hear me at the moment, and Jason is saying thank you very much for spending Friday with us. I'm saying thank you very much for spending Friday with us. For both of us, it's a happy weekend to everybody there, and we'll look forward to catching up with you all next week for another Wealth, Wine and Wisdom, and hope you all have a cracking weekend. Good night for now. We'll see you all real soon.